Yeah, well, this is interesting, and I'm going to hopefully expand upon this. You're talking about the bell, which means the equity bell, which means that's the 9:30 start of formal equity trading. But equity guys are by and large in the dark a lot. It's really the credit guys that set the tone and set the markets, and they use the equity guys as cannon fodder a lot of times. So the way Wall Street is run right now is all these guys that largely represent mom and pop retail or high net worth family offices. They get run over if they don't understand credit, because credit is a lot bigger and a lot more complex than equities. So let's talk about that when you're free. But I will tell you one thing. People ask me why I like to be a trader for over 35 years, and I said, that feeling you get when you're in a big sporting event and you have butterflies in your stomach and you're excited, but you're nervous and you can't, your mouth is dry and your sphincter is clenched up tight as a nut. That's how I felt going to work for 30 years. And people can say, well, that's pretty exciting. But it also takes a toll on your body and your mental psyche, because when you're in a bad spot, let's say you have a bad trading position on, uh, even though the bell has closed, as you say, it comes 4 p.m. and the stock market closes, you're carrying around this position in your head. You go and watch a movie with your wife, and it's been a great movie, and you haven't watched any of it. You're like, I'm thinking about this piece of shit position I'm sitting on, and it's ruining my night, and it's ruining your wife looks at you and says, "How wasn't that a great movie?" And you're like, "Huh? Oh, yeah, yeah, that was really great." And you didn't watch any of it. You're just thinking of the stupid position you have in 360 networks, or some stupid, you got forced into a position. Either you're a bad trader or a client puts you in a bad spot, or you've taken the position and it's gone pear shaped. But you live that, and you love the upside, and it's exciting as hell, but the downside hurts like MFer. Okay. And so that's what people have to understand. It sounds exciting until it's not.
You're telling me, man, forget about it. I've been in that situation quite a few times as well, but I would say it's more like dodging trains. And I can tell you a quick story. It should take no more than 1 minute. I've been in crypto for about 5 years now. Got in December of 2017. And really early on, I got into communities, and there was one individual that personally helped me out. His name was Ian Bellina. Introduced me to a few networks and some projects that were raising money. And I'm like, all right, these are the projects that are going to do the best. It was Terra, Phantom, Harmony, and Solana. I believe Solana was raising money in Q2 of 2018. So I'm like, all right, when these things release into the market, I'm just going to go balls deep. And eventually I did. I've been full-time crypto since September of 2020. Got a few life-changing airdrops, but anyways, I'll just skip to it. Um, in the first half of 2022, there was a token called Luna, right? And a good majority of my stack was in stable coins, right? And these are essentially tokens that are pegged, quote unquote, pegged to the U.S. dollar, right? And a majority of my stack was in UST. And in May of 2022, it basically depegged, and I saw the fucker rug from $1 all the way down to 20 cents in an instant, right? And I'm like, what the fuck? Excuse my language. And I'm holding a space at the time, and everyone's like, what's going on? What's going on? And I'm like, God, please help me. I need this thing to reverse. And then this guy called Do Kwon tweeted out, "Steady lads deploying capital." And then I saw this thing run by a miracle of God, run all the way back to 90 cents. And that was my exit. I had to get out. I didn't think much of it. I'm like, you know what? I'll take the 10-15% haircut and, you know, move on. And that event, Greg, stuck with me throughout the entire summer, where I struggled to sleep at night. The fact that I had years and years and years of hard work pent up almost be wiped in an instant. It stays with you, man. So that really resonates with me with what you're saying.
Well, yeah. So I hear you. Now let's be clear. I'm a Bitcoin maxi, okay, and I hope I don't lose any friends here. because I need people to understand that I love Bitcoin for one very simple reason. First of all, it's decentralized, and that means no one controls it, and it's not an algorithmic stablecoin controlled by this Do Kwon character who can rug pull you. And basically, what was UST and Luna? It was the fiat system redesigned. Okay, it was nothing more than the fiat system put on digital assets, and unfortunately, a lot of people lost a lot of money, including some fairly smart people who got tattoos put on their arms and things like that. Now, at the end of the day, though, I need to be clear with the listeners. There's Bitcoin and then there's crypto, and you're allowed to do anything you want in crypto. I will not tell you what you need to do, which means you can also be shorted if you feel that there are some scams out there, which is totally fine because shorting securities or shorting positions is what makes capitalism work, right? If you're short the regional bank index right now because you thought that it was overvalued, that is fine. Someone bought it from you from the at a higher price because they thought it was undervalued, and eventually the winner will come out in the wash. But I want King, I want to be clear with you. I'm on this podcast not to promote anything but Bitcoin, only because I'm so concerned with the fiat Ponzi. Okay? Understand that banks and the fiat system is in big trouble right now, and everybody needs exposure to Bitcoin. You can do whatever you want with the rest of your portfolio, but please get exposure to Bitcoin. And when they design something that's basically digital fiat, like UST and Luna, and people have comfort in that but haven't done their homework, and I'm not calling you out for not doing your homework, but at the end of the day, you got rugged because it was a algorithmic stable coin that was built on false pretenses. Okay, it's just like fiat. So we can cut this off right now, meaning you don't want to hear about what I want to talk about, which is only Bitcoin, I hope. And it's not to say that I'm trying to promote you guys not to do what you're doing. Okay, if you can make money doing crypto, more power to you. There are opportunities to make money in all sorts of things in the world, but I am not pitching Bitcoin as a money making investment. I'm pitching Bitcoin as your insurance policy on all other assets out there that can get rug pulled, including banks, including the fiat system, and unfortunately, including stable coins and algorithmic stable coins like Luna and UST. Okay. So um, we're going to have a lot to talk about. And I'm not trying to make enemies here. I just want to make people clear, or make it clear that I do not promote crypto. I only promote Bitcoin. It's not to say that you're not allowed to own crypto, and it's not allowed to say that I don't want to be able to be short certain crypto projects. Does that make me a bad guy? I hope not in your eyes. I hope that we can all just agree that my focus in this show, if you're cool with it, will just be on Bitcoin. Is that cool?
Oh, brother Greg, man, you're cool, man. Feel free to go on as many rants as you want, man. I completely agree with you, and you know, thank the Lord that I escaped from almost being rugged, and that's
Yeah, good risk management. Okay, like I have to. No, it is. It's good risk management because when things bounce and they come back,
yeah.
and then you're like, I'm out. I'll let someone else take this risk, but I'm out. That's called good risk management, and that's what New Yorkers do. Or when I say New Yorkers, people that live on stock exchanges for their whole lives, or on exchanges trading value or securities their whole lives. They learn to manage their losers. The winners take care of themselves. It's managing your losers that is the most important part of a risk management portfolio. And what you did is when it came back and you're like, I can't handle this, I'm out, and I'm going to focus on other things, that's good risk management. Whereas other people are like, no, I'm trading my cost. My cost was higher. I'm going to wait for that last $1 of price improvement, and then it falls $90. Okay. That's not how you manage risk, people. You manage risk by when the information changes, you change your thesis. Otherwise, you're going to go out of business. It's that simple. Markets are ruthless, and they're ruthless for a reason because they change on a daily basis and they test your capacity and they test your instinct to manage risk properly. And most people manage risk the following way: they sell their winners because they like to crystallize gains and go to a cocktail party and tell everybody how much money they made on this Apple stock. And they bought Apple stock at $10 and they sold Apple stock at the equivalent of $40. And now it's trading at the equivalent of $4,000, right? Because they overthunk the trade. But they never tell people about the stock that they held onto that they bought at $40 and is now trading at a buck 40, like some bank stocks, like some things. So I'm just here to tell you it's more important to manage your losers. You let your winners run and you manage your losers so that you can live to fight another day. And anybody that does it differently reflects about 85% of the world because it's human nature to crystallize your gains and your winners and pray that your losers will come back. And that's not the way it works. So just be careful out there and focus on your portfolio and understand that the world is entering a new paradigm, in my opinion. And you are going to see more regional bank failures. Charlie Munger, who your listeners may or may not know who that is, but he's Warren Buffett's 94-year-old uh, uh, business partner. Charlie Munger has warned the American public that bank stocks are risky. Now, this is only extremely important for one reason. Charlie Munger has been a bank stock investor for his entire life. It's where he and Warren Buffett have made a lot of their money. And guess what he's warning the US public right now? Regional bank stocks are overpriced and there is another shoe to fall. So whether we talk crypto, which I hope we don't, or whether we talk bank stocks, which I hope we do, I want you guys to remember that Bitcoin is your insurance policy on bank stocks, it's your insurance policy on crypto, and most importantly, it's your insurance policy on the fiat Ponzi that uses bank stocks as the transfer mechanism. And then you can say, well, how do all these other crypto projects fit in? And I'm going to say, I probably don't know what most other crypto projects are, but I'll tell you that 99% of them are going to fail. So if you're trying to find the 1% of these new crypto stocks out there that are going to succeed, I think you're a fool. But don't ever let me be telling people not to be the fool, because the greater fool theory is what makes things work. And you asked me about that movie, the Boiler Room movie with who's the guy there?
Vin Diesel and
Yeah. Okay, all true. Okay, a lot of securities are built upon the greater fool theory, which means you'll make money as long as a greater fool comes along and buys it from you at a higher price. But Bitcoin is the absolute antithesis to the greater fool theory. It is actually your protection against the greater fools. So we could talk all about that. I have a hard stop at around noon. Let me know when how you want the conversation to go, and I'm happy to oblige.
oh,
If you need me to block you because you're a shitcoiner, don't just take that upon yourself and block me so you don't have to hear my stuff. Okay, that's all I would ask.
oh,
Thanks, my friend.
brother, this is just a natural free flowing conversation, man. And let me tell you, man, I'm only 25 years old, but I feel like I'm going back to school here. You're like a professor with a plethora of knowledge, and the fact that this is free is truly an amazing opportunity. So I want to know before I pass it on to Premise, brother Greg, how did you get started in the world of investing, and how did that lead you to finding Bitcoin? And what was it about Bitcoin that made you feel like, all right, I'm going to stay within this community and preach the gospel about Bitcoin's thesis?
Well, yeah, thanks for the question. So, firstly, so you're 25, I'm 60, all right? I have two boys. one who's 27 and one who's 25. So um, I love kids. All right. I also have a daughter, but the point being, I'm old enough to be your father. There's plenty of stupid fathers out there. Okay. Plenty of stupid fathers. Incidentally, isn't it crazy that you need to get a driver's license to drive a car, but you don't have to have any sort of license to have a kid? And that's just an aside. Okay. Think about how fucking asinine that is and how many stupid people have children. And this is part of my bitching and complaining. But let's keep this focused. How did I get involved in Bitcoin? So I went to Cornell. I'm a Canadian, first of all. I went to a great school in Canada, an engineering school called McGill University. I graduated in engineering, but I was at McGill to play sports as much as get an engineering degree. So I understand mathematics. I love math. And but I said, you know what? I never want to really be an engineer. So I was lucky enough to apply to one U.S. business school, uh, Cornell University. Uh, I only had about 250 bucks to my name, and that's how much it cost to apply to the school. So I applied to one U.S. university and a few Canadian universities that cost 60 bucks each. So anyway, I applied to Cornell and I get lucky enough to be accepted. Even as a student with no work experience, I would not have been accepted if I was an American. All right. And the reason I wouldn't have been accepted is because while my marks were good enough in undergrad, I had no work experience. But the fact that I was applying from a foreign country and Cornell was trying to increase their international business presence, business exposure, if you will. I got accepted, and I'm forever thankful because um, first of all, I went down and lived with Americans. I had 7 roommates. I was able to hang out with these undergrads while only being a year older than these guys. They're still some of my best friends, including one who I'll call out, Sean Lynch. He died in the World Trade Center. So, I've experienced the United States. I understand the difference between the cultures. And I was a young kid at a world class business school, Ivy League. Some people may or may not know that Cornell's an Ivy League school. And I got the education of a lifetime. And I got 2 years under my belt. I had the opportunity to work physically on Wall Street, but I said I want to come back to Canada. I want to work in the Canadian financial system. I think I can bring value back to Canada. And I got a job back in my hometown of Montreal at the head office of Canada's largest financial institution. And that still is Canada's financial institution. It's called the Royal Bank of Canada. And it is a very large bank by global standards because in Canada, there's only 8 banks for the entire country, whereas in the United States, you have 5,000 banks. And generally, the rule of 1 in 10 applies. So when I say that, what do I mean? Well, Canada has about 1/10 the population of the USA. You guys are 330 million people. We're 33 million people here. We have about 1/10 the gross domestic product, the GDP, which is basically the size of the economy. And that makes sense because if we're 1/10 the population, our economy, which is very similar, should line up. But what we don't have is 1/10 of your banks. In fact, if we took 1/10 of 5,000 banks, you'd expect Canada to have 500, but we only have less than 10. And why is that? Well, it was basically because our regulatory environment allowed for banks to stretch from coast to coast, whereas in the United States, you had antiquated interstate banking rules. Anyway, I come back to work for Canada's largest financial institution, Royal Bank of Canada. I'm working directly for the CFO, the Chief Financial Officer, and I'm working on a project that involved restructured Latin American debt or Latin American loans. So this was back in 1988. And I basically was working on this project to evaluate a US Treasury Secretary Nicholas Brady proposal to restructure these Latin American loans, which were bankrupting the entire banking system in the world. Well, sort of like what we're going to go through now with real estate, but imagine that this is Latin American debt. And Royal Bank of Canada, which is one of the globally important banks, was no different than your money center banks in the USA, Chase Manhattan, and Bankers Trust, Manufacturers Hanover. Notice that none of those banks exist anymore because they've all been acquired or merged. They all had the similar problems. The banking system was bankrupt, which is to say, if you marked to market the Latin American debt loans down to the trading price of those loans, the book value of equity, the risk absorbing capital on the balance sheet of the banks was vaporized. And that's very dangerous for the banking system because people lose confidence in the banks. So, Treasury Secretary Nicholas Brady comes up with this Brady bond plan, and it was my job to tell the Royal Bank of Canada what Brady plan option we were going to take. Now, these numbers are going to sound pathetically small, but at the time, these were huge numbers. The Royal Bank of Canada had $4 billion of Latin American debt, and 1 billion of it was outstanding to Mexico. And that was the first plan or bond that Treasury Secretary Nicholas Brady wanted to restructure. And these Brady bonds were very ingenious financial instruments. And it was an accounting gimmick to rescue the banking system. But again, here I am, a 25-year-old kid. So basically, this was 1988, and I was born in 1963. I'm your age, and I'm working for Canada's largest financial institution directly for the CFO. And I'm responsible for $1 billion decision, okay, which is pretty cool because, you go to school to learn this. But I was unaware of the financial situation of the bank when I joined it because it wasn't in the newspapers, right? So I did a quick back of the envelope calculation. I said, okay, the Royal Bank of Canada has a total of $4 billion of Latin American debt. It's trading at 25 cents on the dollar, which means we need to write down our portfolio by $3 billion. And when you write down loan losses, you write them down against your book value of equity. So I flip to the balance sheet and I look at the book value of equity of the Royal Bank, and lo and behold, it's less than $3 billion, which means it's negative, which means it was in the same situation as First Republic Bank, okay, which just got liquidated or seized in the US. So 30 some years ago, I'm at the equivalent of First Republic Bank, and I report to our CFO, and I look at him and I go, Emil, we're in big trouble. And he goes, I know, don't tell anybody. And I'm like, what the absolute fuck? I just spent 6 years in school to come and work in a banking system that's insolvent, and I'm not allowed to tell anybody. Now, who could I have told? If I had run to the Wall Street Journal to tell people this, first of all, would they have believed me? No. Secondly, would I ever have a job again? No. Thirdly, I had school loans I had to pay off. So I bit my tongue and I did whatever I had to do to make the right economic decision for Royal Bank. And we did. And I actually told my CFO, Emil, these Brady bonds are friggin' cheap. You got to buy some more. And what does a bank do when they've blown their brains out at 100 cents on the dollar and something's trading at 25 cents on the dollar? They're like, no thanks. I blew my brains out at 100 cents on the dollar. Why would I buy more of these things? Well, guess what? These things went back to 100 cents on the dollar. And it was a good restructuring based on an accounting gimmick that basically showed me that fiat money is a Ponzi. So I have been looking for the solution to the fiat Ponzi for over 30 years because I spent the rest of my career trading high yield debt and credit instruments on Wall Street and in Canada. And I've never been comfortable with this fiat Ponzi, but I never knew the solution. I never became a true gold bug. I understood the value of things called hard assets. I liked owning equities. But when I first was introduced to Bitcoin in 2016, I believed what the newspapers were telling me, that this thing is a Ponzi. And I'm like, well, it's got to be because the newspapers are telling me. But luckily, in 2016, I actually did some research and I saw the Bitcoin blockchain in action. And I'm like, hold on a second. There's only 21 million of these things. I can see the transactions taking place. I can see the mempool. You can transfer me value over time and space, and there's no intermediary. There's no bank. I don't have to go through a wire transfer process. I don't have to go through any intermediary, and you can transfer me value. I said, this is effing beautiful. This is the solution to the fiat Ponzi that I've been looking for 30 years. Again, this was back in 2016. And I said, it's trading at 800 bucks. I said, it's going to 10,000 easily. And I got involved. I became a shareholder in a company in Canada that became the first Bitcoin closed end fund. And we raised money for that, and it got listed on the Toronto Stock Exchange. And we helped Canadians invest in Bitcoin, not directly, because not your keys, not your coins, but at least Canada has a Bitcoin spot ETF, thanks to the efforts of my partners. And I invested more in Bitcoin, and I studied it more and more. And did I own some shit coins at some point in time? Yeah, I'll have to admit, I owned Litecoin and I owned Ethereum. But those things are shit coins, and I don't own them anymore because I did more work, and I understand why. There is only one use for a blockchain, and it's when it's purely decentralized. Otherwise, you can do database technology much more efficiently in a centralized fashion, not using blockchain. But you hear these guys like Jamie Dimon saying bullshit like, and Jamie Dimon, CEO of JP Morgan, I like blockchain technology, but I don't like Bitcoin. Jamie Dimon is a fucking fool if he actually believes what he said, because the only pure use of blockchain technology is for a purely decentralized protocol like Bitcoin. And anything else that has a centralized control can be done far more efficiently with a centralized database. And I hope I'm clear on that. So Foss buys Bitcoin at under 800 bucks and goes around telling people that it's going to 10,000, and they think I'm a fucking moron. And I'm like, okay, whatever. And then it goes higher than 10,000. And I'm like, I think I'm really onto something here. And I designed a Bitcoin pricing model that is used to calculate its intrinsic value using credit default swaps. So I'm getting a little granular for you, and you can mute me anytime. But at the end of the day, I believe Bitcoin to be the equivalent of credit default swap insurance on a basket of fiat currencies that span the world. Every single fiat currency will fail over time, and Bitcoin is your protection. And 99.9% of shit coins will fail over time, and Bitcoin is your protection. But if you really think you can find that 0.1% of shit coins that are going to survive over time, go ahead and try and pick up those nickels in front of a steamroller. But the biggest risks in shitcoins is getting rug pulled by centralized control mechanisms like Do Kwon. Okay? That is the danger. And Bitcoin has no central point of failure. And that's why I love Bitcoin as a decentralized protocol to protect me against the centralized points of failure in the world, which include fiats and central banking and shitcoins, and to an extent, certain equities and pump and dump schemes. But other than that, I love equities, real equities. I love real hard assets like Bitcoin, like gold, like real estate. But I'm here to promote Bitcoin as your insurance policy. Over to you, man.
Brother, I'd love for you to go into detail when you were talking about credit swaps on Bitcoin. How does that look like? That is a sector that's completely new to me.
Yeah, so I'm a big fan of Swan Bitcoin, and they have a CIO, Chief Investment Officer, who goes by the Twitter handle Alpha Zeta. And without getting into too much granularity, Alpha Zeta has programmed my model on a website called nakamotoportfolio.com. So Nakamoto, untitled.portfolio.com, free and open source software that will allow you to change the assumptions that go into calculating the intrinsic value of Bitcoin using credit default swap rates, which are open market rates traded by credit traders, like I spent my whole life, on sovereign debt, and you get a value of Bitcoin. And by all models, you can see how extremely cheap Bitcoin is relative to its intrinsic value as insurance. And as more banks fail, the risk in the system flows uphill, right? The banks need to be rescued by the government. The government needs to issue more debt to cover the expenses of the failed banks. The debt burden increases and the cost of default rises. So hopefully you see how that dynamic works. And I'll just tell you that Bitcoin is the best credit insurance on the fiat system I've ever seen. And it's got no counterparty risk, which means you don't have to buy this insurance from an insurance company, because when you own your Bitcoin and you keep it in cold storage, there is no counterparty risk. You have this in your possession. It's a bearer instrument. So I don't want to go into the intricacies of how the credit default swap markets work. It's only to say that when your professor in university told you that the USA is a risk-free investment, well, he was wrong, or she was wrong. Because if it was truly risk-free, there'd be nobody out there buying insurance on the potential for the USA to default. So all you have to do is always look to free and open markets, of which credit default swaps are one of the last remaining non-manipulated free and open markets in the world. And I'm proud to tell you that just last night, Alpha Zeta put online the Nakamoto portfolio that values Bitcoin using credit default swaps. So it's an amazing tool that you can play around with. My research paper is attached to that web page, and it's a paper that I wrote about 3 years ago, and it's based on my career, and it's not easy reading. It's about 40 pages long. There's some pretty funny stories in there about how stupid Wall Street can be. But if you truly want to learn how Wall Street works, how why so many centralized, like why Jamie Dimon is so wrong, why that guy that writes for Bloomberg, I can't remember his name right now, he writes the Bloomberg, I actually call him out in my paper because he was what's his name, damn, he writes every morning for Bloomberg, the Bloomberg magazine market commentary. Anyway, he's another fiat shill. Doesn't understand how Wall Street really works. But point being, very simply, guys, this is a new paradigm. And Jamie Dimon is scared shitless of Bitcoin because he knows that Bitcoin will disintermediate all the banking services that he makes so many fees on. And should he be scared? Yes. But as a bank shareholder or a depositor, a guy who has deposits, or a person who has deposits in any bank in the world, you need to understand what true risks you are being exposed to. And don't listen to the fiat shills, and understand that banking is extremely risky, and being a depositor in a bank is actually very risky. But more than that, being a bank shareholder is one of the most risky and asymmetric opportunities to the downside I've ever seen. Bitcoin is asymmetric opportunity to the upside. A bank stock is basically asymmetric opportunity to the downside. And look no further than the performance of First Republic Bank over the last 3 months. You would have thought that was a shitcoin and a rug pulled shitcoin. No, no. This was a bank stock that traded on the New York Stock Exchange. It was a top 20 bank in the United States, one of the 20 largest banks in the USA. In 3 months, went bankrupt. That's asymmetry to the downside, like a shitcoin rug pull. And that's the system that supports our fiat economy. So I've done a lot of talking. By now, there should be enough hate mail in my DMs. Go fuck yourselves, people. If you're not smart enough to listen to what I'm saying, okay? If you're not smart enough to listen to what I'm saying, you should not be managing your own money, okay? You don't know how to manage risk. Go and pound your pud in the corner and play video games in your fucking idiot basement and paint your hair purple and do all the shit. You don't understand how the world works. Okay? The world works with big money capital allocating to assets that are non correlated. And Bitcoin just happens to be the most beautiful, asymmetric to the upside, non correlated asset I've seen in my 30 years. So please don't overthink things. You can do whatever you want with 95% of your portfolio, but do me a favor and get at least 5% of your portfolio in Bitcoin for your kids. That's the end of my rant.
Oh, brother Greg, man, there's going to be no hate mail. If anything, you're probably going to get recruitments to be in the Goodfellas reboot, man. You ever seen Goodfellas, brother?
A little bit. I'm not a huge fan of that, but there's a lot to be said about people who speak honest, right? And people, I swear a lot, but by Wall Street trading standards, I'm one of the most polite traders you'll ever meet. Okay, I do drop the f bomb because I've been trained to do that. Like if you work on a trading floor, it's very difficult to. Go home and remove that from your vocabulary. And if you've done it for 35 years, sometimes they slip out, but I say I swear because I care. But I also swear when I want to emphasize that I'm telling the truth. And there are a lot of foolish people in the world that don't listen. And I keep having to repeat the message. And they're like, some of them are like, Foss, you keep telling me the same thing. And then I say, are you listening? And they go, well, maybe I'm not listening. So wake the fuck up, people. The world is in big trouble right now, and you got all these people on CNBC saying, oh, well, we've contained the banking crisis. You haven't contained shit. All you've done is stuffed a piece of, a toilet paper roll in the bottom of the toilet, and now your toilet is going to fucking overflow. You guys don't understand how the banking system works. And it's really, really disappointing when you get Elizabeth Warren and you get Jim Cramer up there saying bullshit like, I think that FRC, which is the symbol for First Republic Bank, is going to mark the end of the banking contagion. No, it's just starting. It's starting now. We're in the first couple of innings of a 9 inning game, and you're going to get smoked. Why? It's only mathematics. Banks are 25 times levered to their risk absorbing capital base, and they always go insolvent in times of crisis. So, the 5 crises that I've lived through, I hate to replay them for some of the listeners. Latin American debt, 1988. 1998, long term capital management. 2008, the great financial crisis. COVID, and now the regional banking crisis, 5 of them. And every single time the banking system is insolvent. And every single time people get slaughtered. And this time will be no different because that's how the fiat Ponzi is built. So protect yourself and own Bitcoin. Everything else, go fuck yourselves.
Brother Greg, man, during your time at Wall Street, I'm pretty sure you saw a lot of your associates crack under pressure. Hearing your high conviction spirit, I personally love it, man. I come from a wrestling background and also training strongman and powerlifting and dungeon gyms and all that stuff. So, I love the
Well,
high
that's cool
energy.
because a lot of people succeed in Wall Street because of exactly what I told you, right? The competitive nature. You go to work and you have the butterflies in your stomach. You like the competition. At the end of the day, you know exactly what the score is, right? You have a trading portfolio. You know exactly how you've done. You're either winning or losing. And every single day is you have that locked in, and you can go home feeling like shit, or you can go home feeling like amazing. That being said, if you get swung around like that, your emotional highs and your emotional lows, you'll become a manic depressive very quickly. So I've seen a lot of people get wheeled off the floor. Literally, I saw a guy have a heart attack right in front of me. They had to bring the gurney in and wheel him off the floor. Okay. He had just issued a debt. Believe it or not, he was issuing Canadian dollar denominated debt for Mexico. So it's another story. Yeah, I've seen people get wheeled off the floor. I've seen people crying. I've seen fist fights, literally fist fights right in front of me. And they work at the same shop. They just have a different position. One guy's long and one guy's short. and they work at the same shop. So the risk manager doesn't care.
Oh man,
But then
where
I've
have I
seen
seen
fist
that?
fights. Okay. So this is how Wall Street works. And yeah, I've seen a lot because over 30 years, you see a lot of things. And things happen faster now because technology is, the spread of information, the ability to calculate spreadsheets. All spreadsheets do is speed up the information of spreading garbage. Okay. Like you used to be able to do your own models on the back of an envelope and they have to convince people you've done a whole lot of work, but now a spreadsheet allows you to do the same amount of work in a fraction of the time, but still garbage in equals garbage out, right? So Wall Street is built on all sorts of algos programmed by Ivy League fucking cucks, okay? Hey, guess what? I'm an Ivy League cuck. I can say that. All you fucking clowns that went to Harvard and Cornell and Yale and the other 8 Ivy League schools, you guys are privileged little Ivy League cucks who haven't done the work on how to understand the fiat Ponzi that your daddy and your daddy's daddy and your mommy's mommy and your mommy's mommy worked in, called Wall Street. But you are a spoiled little fuck and you haven't done your work on Bitcoin. And Bitcoin's going to disintermediate your world. And you're going to be sitting in the corner saying, what happened? How come this all exploded on me? Well, that's the way pure capitalism works. And we better all learn how to speak Spanish in North America because all of the smart Bitcoin risk taking is coming out of countries in the Southern Hemisphere. And I'm serious about this, people. If we don't take Bitcoin seriously, Canada's a rounding error. We are a G7 country, but we don't matter. Okay. We're less important in the global economy than is California. The state of California is a bigger economy than all of Canada. And I like to say, okay, Canada, we live rent free in the attic of the USA. Most of you fucking clowns can't even find us on a map because you're so insular that everything works perfectly in the United States. Well, it does until it doesn't. And you have politicians that are telling you to fear Bitcoin. Elizabeth Warren, Miss Pocahontas, you are, well, whatever. You're giving bad information to the children of America. And this is what makes me so disgusted because they're part of the system that is paid to gaslight you. So anyway, I'm an Ivy League cuck. I can call out the Ivy League cucks that are using Bitcoin and putting Bitcoin in an algo and trading Bitcoin like some sort of risk asset when in fact it's not a risk asset. It is an insurance policy. And they'll come to learn because guess what happens to them? They get wheeled off the floor because their model breaks when the world comes to understand that Bitcoin is insurance. It's not a risk asset. So I'm 46 minutes into something. I can't believe that you guys are still listening to me. I have 15 minutes left and I have a hard stop at noon. Ask me some questions. Send hate mail to Dylan LeClaire, who I see in the audience. So thanks for tuning in, Dylan. I love you, man. Dylan LeClaire is one of the smartest kids I've ever met. All right. He's your age, King. He's 25 years old. I'm going to dox him because he's not shy about this. He left university after 1 year because he was I
Oh,
saw
he
him
bucked
drop
it.
down now.
He bucked it, bro. He bucked
Okay.
it.
He wanted to he left university because he was sick of the Keynesian brainwashing. Okay? Fuck, that's a kid who's pretty cool when he realizes that you're being gaslit. So, sorry, I bumped Dylan off your stage. Maybe he's going to
Oh,
text me like, but that being said, here's what I know. This is what I've learned. Watch this.
hey, welcome to Domino's.
I know how to use a soundboard on spaces now. I'm 60 years old and I'm a 12-year-old playing games like I did on the trading floor. And guess what? That's the only thing that keeps you sane in this insane world that we live in. So I see some hands up. And I got 15 minutes or 13 minutes now. So go ahead, hit me.
Let's go, man. I'll pass it over to Premise. He had his hand up first, but uh, Greg, I just want to let you know, man. I'm not an Ivy League cuck. I actually had to drop out of college to get 2 jobs, and when I
And
was going,
that's why you're a good man. And that's what makes America great. And we're not crying about this, okay? We need to fix this by telling the truth. And we need to fix this because the system is so broken that you can vote In either party, you can vote into the presidency incompetence. In either party. It doesn't matter what party you're part of, you're voting incompetence into the most important chair in the world with the choices that you're currently presented with. Now that can change, but it needs
Great.
to change quick. Yeah, go ahead.
I want to ask you a question while I still had you because you were still concerned about the banks. So last year, I studied and learned we had an 80 trillion forex swap that suffers from the foreign banks. However, these foreign banks owe us, so that would trickle down to us. However, that's not what's been causing these most current actions. Is that something that people should still be worried about? Is that the end game? Is it this 80 trillion hidden forex swap debt that they can't even find, which CBDCs seem to be the perfect solution for so conveniently for them? Is that kind of the end game here, or you're more still worried about banks here at home?
Well, okay. So there's a lot of, first of all, in the euro dollar market, there's a lot of unrecorded actions. What is euro dollars? Those are dollars that trade in Europe based in US dollars. And it's not it within the purview of the Fed and the systems that the Fed can monitor. But I think we're overthinking it a bit. Okay. The reality is it's not 80 trillion, it's 400 trillion dollars of global debt. I'll say that again. There is 400 trillion dollars of global debt. And what is the size of the global economy? About 100 trillion US dollars. So the amount of global debt is 4 times the amount of GDP or sales in the world. I'll just tell you that's an incredibly huge number. And to pound home a point, global stocks are under 100 trillion. So global debt is over 4 times the size of global equities. And that's why debt runs the world. And if you're some equity clown that doesn't understand where the debt trades, you're going to get put out of business. So here's what I know. $400 trillion of debt. Global GDP is 100 trillion. What is the average coupon on that debt? Let's say this is all debt. This includes junk bonds, bank debt, sovereign debt. Let's put an average coupon on that debt of 3%, right? 3% on 400 trillion, or 4 times the size of the economy, means that your numerator, your total debt to GDP, is growing at 12% relative to your denominator, right? Everything else being equal, 4 times 3, which is a low coupon, that's the organic growth of your debt, is growing at 12%. Is it likely that the global economy is going to grow at 12%? No, that's not likely, people, which means that interest expense is going to continue to grow and make the debt spiral accelerate because it's only grade 11 math, which means how do they solve that? They need to print more money. What happens when you print more money? Fiat debases, meaning the buying power of fiat decreases, which means you need hard assets. And Bitcoin is the greatest hard asset that's ever been invented, and it's got a 21 million supply cap. So it's not just 80 trillion, it's actually 400 trillion. And that is your big problem because that thing is growing with a coupon. That's what debt is. It's a fiat contract that has a contractual interest obligation. And that thing's going to continue to grow. And the global economy will not be able to keep pace with it, which means they'll have to print more fiat money to solve. That's what's called a rounding, not a rounding error. It is the error term in the circular logic. And that's why fiat money will fail because it always does. And that's why you need to own hard assets that will protect you against that reality. So that's what Bitcoin is. Good question, but I have an expression in bond trading, too smart by a half. Okay. What does that mean? Well, you could have bought something at $4.50, but the bid was 4 and you're trying to buy it at 4, even though you think it's worth 44. So you don't lift the offer at 4.5. You try and buy it on the bid, and then someone else buys it at 4.5 and goes 5 bid. And you're like, fuck, I could have bought it at 4.5, but I just tried to buy it 1/2 too cheap. And I knew it was worth 44 bucks. And then you don't buy it at 6 because you're like, I could have bought it at 4.5, but I'm not going to buy it at 6. You guys don't know how to fucking manage risk. Okay. Get to the regular fucking risk manager journal. When something's cheap, you buy it. And Bitcoin is stupid cheap. I think Bitcoin will be worth Well, not it will be worth. I think Bitcoin's worth over 2 million US dollars in today's dollars today, and it's trading for 28,000 bucks. Are you kidding me? You're going to dick around and not buy it at 28,000 because you think you can buy it at 26,000? You're a fucking you are whatever. You are a fool. And that's not how you manage risk, people. You're going to go out of business. Hope that answered your question.
Oh, Greg, man, that animal spirit, bro, it's coming out, dude. Love to see it. But we'll pass it over to Will's Outlook, and I see we got some new faces in the crowd. If you guys are enjoying the space, feel free to follow Greg. He's pretty active on the spaces. I saw him on the Twitter space that Swan was hosting earlier today. And also feel free to follow us here because Bitcoin. Every follow counts, and if you want to keep up with our content, feel free to do so. So we've gone over to our one of our team members, Will's Outlook. He's had his hand up for a while. Will, what's going on, brother?
Hey, how's it going? No, I love the Ethereum tends to be one of those conversations that a lot of people like to ignore. I get bashed a lot for coming in and bashing Ethereum, but if you look at something like Bitcoin, for instance, and I'm not even a maxi. Like I believe Bitcoin's a store of wealth. I believe everything else is a way of creating liquidity to put in that store of wealth. So like when you look at something like Ethereum, for instance, I'll give you an example. It's basically been through three phases. You got Ethereum Classic, then I moved to regular Ethereum, and that was Ethereum proof of work, and now we moved to Ethereum proof of stake. And people say Ethereum's decentralized. It's 100% centralized. I think it's a VC coin at best, and a lot of people like to argue that point with me. Tons and tons of spaces they like to argue that point with me. It's not an investment tool. It's a way to create liquidity. If you're looking to create liquidity to put back into something that stores wealth, which would, in my opinion, be Bitcoin. And I'm not even a maxi, but I understand this fact, right? When people ask me like, "Hey, I have a lot of money. What should I do?" I'm like, "Hey, you should look at storing some of that wealth, which would be Bitcoin, and you should look at creating wealth, which would be, hey, play with the memes. All the memes are basically all the altcoins."
So I'm not sure if that was a statement or a
More
question,
of a
but
statement,
amen.
but
Okay.
I was agreeing with
Okay.
you.
You get an amen from me. Okay. But the key is centralization versus decentralization. But send your hate mail on Ethereum to anybody else but me because I don't care what you do as long as you own some Bitcoin. Okay. You can do whatever the hell you want to try and either gain or lose money. But I'm a Bitcoin guy because I believe it solves the biggest problem in the world, which is fiat. And can we argue that actually Ethereum is a form of fiat? Yes, I can. But if you have to own it because you think Vitalik is some sort of space age, woke tard, okay, he's a space age woke tard. Go and try and make money with him. Over to you guys.
Snorlax. I'll pass it over to Snorlax. I see we only got a few minutes left. If anyone else wants to come up, feel free to request, or if not, just leave your question down in the comment section to the bottom right. But Snorlax, brother, go ahead, man.
I've just been enjoying the space, Wabi. Great dialogue all around, guys. That bond story Greg was just telling me, or was just telling us, reminded me of a line I heard or I read from, I think it was Tom Dante, which was "Don't be a prick for a tick."
Oh yeah. That's because bonds usually trade in ticks, which is a 32nd or a 16th. Okay, because it's all math. A tick in treasuries is a 32nd or even a 64th, so 1/64th. A 32nd or in high yield bonds, which I traded, they're eighths. Okay, so 1/8 is 12.5 cents on the dollar. A quarter obviously is 25 cents. So 12.5 cents. Then you start getting into 16ths. Then you get into 30 seconds. But in all cases, don't be a dick for a tick is the same thing as don't be too smart by a half. Okay. Because high yield bonds generally trade like I'm 44.5 bid, 44.5 offered. There's your bid offered spread, 1/2 of a point. But a tick is in treasury markets, much more efficient. It's a 16th of a point or it's an eighth of a point, but sometimes it's even as much as as little as a 64th of $1. Anyway, guys, I'm gonna have to sign off now. Unless Snorlass or however you say your name, I apologize. You have one more statement. Otherwise, I love you, bros.
Oh no, nothing that you haven't already touched on already. We really appreciate you for giving your time, Greg.
My pleasure, fellas. Thanks for the honor. And remember, I have kids that need the solution of Bitcoin. Someday you're going to have kids, I hope, and they're wonderful, but they're also stupid as shit sometimes. Don't be stupid as shit. Do your homework and understand the difference between Bitcoin and shit coins. You're going to lose all your money if you're in shit coins, people, or you could be part of the most amazing asymmetric upside opportunity. And it's also insurance, and it's called Bitcoin. Over and out from Canada. Thanks for having me. If you want me back some other time, I'd be happy to come, but I'm pretty sure this show will go down in the annals of failed spaces marketing for crypto.
Good having you, brother. We got to get you with Dan Pena one day, man.
Who's he again? That idiot that said it's going to zero?
Yeah.
Fucking guy has not done risk management, okay? If he's 100% certain, then he's wrong, because the only thing that's 100% certain is fiat money will debase. Everything else is a probability. And Dan Pena is a foolish looking fucking old geezer who's been offside, and he's still preaching a bad trade. So fuck Dan Pena. He's an idiot. Goodbye from Canada. Thanks, guys.
Hey, brother. It was good having you. God bless you, brother. Well, that was awesome. That was a treat.
That was a great show, Wabi.
Yep. That was something. I gotta digest it. It was like I came out of a movie theater, man. If you guys are new to the space, welcome. We're about to roll over into market check. So if you guys want to partake in the conversation, feel free to do so. This is going to be now more of a price action based space, but we host spaces like these all the time. And if you guys are new, feel free to follow us here and turn on bell notifications. I need you all to just follow that giant yellow rectangle, square, pyramid, whatever shape you want to call it, whatever you want to identify that shape as, just follow it. Just follow it. But Mr. Producer, send Max the speaker invite, because whenever I do it, there's always a connection issue. So send Max an invite to speak, and send Snorlax the co-host invite, so we can continue the show rolling, or premise, whichever one wants to be co-host. But yeah, if anyone in the audience wants to partake in the conversation, feel free to do so. Okay, Snorlax just accepted. I'll bring up there was one guy who requested to speak, so we'll bring him on up and see what he wants to say.
We can honestly continue this conversation about Bitcoin if you guys want to.
Yeah, that's fine. That's fine.
I thought Greg brought up some really interesting conversations about it, or some points that I hadn't even thought of myself.
Yeah, that was epic, man. That was something, dude. I felt like I was in a classroom and he was like a professor, man.
I think he likes Bitcoin.
I didn't even know that, man. We were just getting to the ground surface level when it came to that. When you think about it, really. I accepted somebody up, by the way, guys. He seems to be connecting. Do you guys see him as a speaker on your guys' end?
No, we still got Max down there. But I mean, look, we start kicking it off and just kind of go as we go. People pretty sure will come up as they can. They might have to reconnect if they're having trouble.
Yeah, Max, you may have to restart the app, man.
Yeah. These spaces need to improve like ASAP, man. There always seems to be like these little buggy updates, and before, like, I think you were just able to just come in, and I think you had a selection. It said listener and speaker, how you wanted to enter the space, and it would just take you in almost immediately, man. But as far as price action goes, equities seem to be having a slight dip. Whether it's crypto, doesn't really seem to be taking much of an impact relative to whenever equities go down. So I'm still bullish, bro. I'm still bullish. Snorlax wasn't the date that Marin had mentioned, by the way. I think it was April 19th through May the 2nd. That was supposed to be like some sort of down period. But I understand like BTC locally topped like around the 20th or so. But would you say that you're sort of like underwhelmed between her predictions?
I mean, it usually just a full moon, big lunar event just signals change more than anything, and um, I know typically these periods aren't just exclusive to kind of, I think, just strictly the lunar. At least when it's just like 2 weeks. I don't know. I wouldn't say that we're necessarily like out of the woods yet, if that's kind of the question that you're angling for. Um, but it'd be really funny if, you know, I guess it'd be funnier if we dumped outside of the most obvious 2 week date and in May anyway, right? Fulfilled the sell in May meme, but not quite the full moon meme. We did get like a trend or a shift in price, like you said, Wabi. We did top, I think, on the 20th. So, it might signal some sort of reversal, which we don't know that yet. Bitcoin's still trying to curl back up and try to squeeze some shorts, take the highs potentially again. But I'm a little bit skeptical in that regard. But I would like to see it, for my bags.
And I also noticed that like some sectors of the market topped out in February, and then shortly after the Arbitrum airdrop, like a lot of this stuff is sort of like going into rotation into the meme stuff, sort of like I call it DeFi Summer 2.0. But it's on Deck Screener this time, and it's like equally as risky as DeFi Summer was. But what should we change the Spaces title to? Because Greg just left the building. I'm not sure what you guys want me to put there, or Mr. Producer, if you want.
Yeah, we just run with market check and let's I mean the meme coins are still running. Let's meme season it up. I posted some charts up in the space. I'm down to talk about kind of what I'm seeing in crypto. There's equities too. It's just equities been kind of boring, honestly, more than anything. When there's so much action going on, right? Like another 100% for Wojak overnight. And kind of I ran a fib on it yesterday, all up there in the nest, and I kind of start projecting like what are going to be the breakout levels. And it's just hard to do this because when you're in these meme coins, they can run so fast. But Bitcoin got a little bit of recovery today. I see we're at like 25. I actually still wanted to see it, believe it or not, the kind of continue more of a correction go before we get into Miami. I think if we want to survive the sell in May, you kind of want to just get any corrections you want out the way or that you need to do out the way now. Because in the end, some of these inefficiencies you think 9 times out of 10 will get traded into. Look, getting down to 25, I know we were all waiting for that. That's just getting rough, right? At some point, you're just going to have to say, okay, 25 ain't coming. I think we got down to what, the 27.6 on this most recent low move. So we'll see if they turn it around here. Like 25 is 26, 25 is still the ideal area where I'd try to play a bounce, dude. And then I would take this market into Miami. That's just the way I was thinking about doing it. But, the beauty is we got individual tokens doing their own thing. The amount of the amount of fun we're having in Pepe and Wojak, I'm plenty of entertained from the market side of things. So equities, Qs, like I said, look, the Fed is tomorrow, right? I don't even think there's no point in talking about whatever price action is doing today until the Fed is out the way. So we're nuking before Fed. I don't know. Does that mean, hey, we're going to sell more off? Is that just the hedges coming in? I would like to think it's the hedges coming in. We could be locally topped. Who knows? I don't predict anything he can say drastic that would cause the markets to be more fearful unless he's answering questions about recessions and saying, "Oh, guarantee, best believe we fucked up. We're not gonna soft land at all." Maybe that could trigger sell-offs or something. But it's nothing that you got to panic with these events because whatever price action happens is normally like Snorlax has said a million times, going to be a grab for liquidity, right? And we'll see a fade to the other. CPI, yada yada, then we know we can start doing math on CPI, which I'm going to start today, but not doing things.
Yeah,
When is
gold
CPI
is also
printed?
up. Gold is actually up today as well. I think we might be following gold as far as the cryptocurrencies are concerned. As long as gold stays bullish, I think we continue to rally. Same thing with like Nvidia and Apple and all that stuff. I'm not sure why like people want to get like so bearish on like a small dip. You know what I mean? Um,
So they're
like
buying the recession-proof stuff. You think we're trading along with metals in the crypto space?
yeah, like it like over the last 6 months, gold is up almost like basically when the Nasdaq bottomed in October, gold has put in a 25% gain, and when you have quarter by quarter higher highs and higher lows, like I'm not going to be bearish, dude, at all. Like I'm just not. I'm going against strength. It's like the analogy that I used yesterday. When you see Tom Brady play and he's just killing it, Super Bowl after Super Bowl after Super Bowl, why would you bet against that? Like it's better to move in the current when you see a clear trend shift, right? Like it's sort of like in Snorlax, I'm sure you know as well, but it's like going from 60K to 40K, right? In a dip, right? It's like, wow, BTC's at 40K. What a nice opportunity. It's like it's not the same thing when you retrace through a level compared to breaking it. Am I making sense, brother? Does that make sense, Snorlax? Like surpassing surpassing 30K at the current moment, like breaking out of it is a lot different than, when we have a dip through it, right? Because both of them would indicate trend reversals. Like the first time we broke through 30K, we ended up going to 17, and now if we break through these levels, it's clear indication that we have clear skies ahead all the way to 40, 45.
I see what you're saying, Wabi, but I'll be honest, I don't know that I necessarily agree because, when we broke 30K as a range low on Bitcoin, I had because, you have to like use the replay tool on your chart here mentally for a second, right? When we're trading at 30K, that at the time was, high time frame structural support for, a much larger uptrend. Um, and so when we were trading back down there again, it was essentially for me like, okay, you either hold this or we're breaking out of, like you said, or like you're pointing out, this range between 30 and 65K that we've been trading in for, 2 years now. And when we broke down from it, obviously I could assume that we were going to have a really strong move lower to a very high degree of certainty, given that I had like structural confluence, you had range confluence, and then you had lots of trap traders um, above us from 2 years essentially. If you view that as a distribution range, which we have yet to re-accept back in, so you have to view it as a distribution range at this point. We have a lot of supply above us, and so I view it differently coming back in from the overhead. In that, I don't. I guess now we have a more complete picture of Bitcoin. That now includes what we did after we dropped from 30K, the FTX crash. We formed a base, but we're trading back into levels that we hadn't traded through essentially since before our breakout in 2020. So I think what I'm trying to say is I viewed 30K as a much bigger level for price when we were breaking down from it versus if we were to break into it. Like I don't think 30K is necessarily the reason why we kind of sold off at that level. Yes, there is technical confluence to sell there, but I think it was more kind of just related to supply and demand dynamics there locally, largely due to I've talked about it before. We have people buying spot, um, and they've been buying spot at prices that we wouldn't have looked at being that favorable 7 or 8 months ago. But perps just has not followed through in the same degree, and to get the breakout, we kind of need them to almost follow through at the same time out of 30K. But I do agree with you, Avi. If we accept back in like above 30K, from a structural standpoint, I would be looking at taking much higher prices. But I don't think it would be because we're accepting back into range low. I think it would just be because there's just at that point we'd be trading into these massive monthly gaps of liquidity. And it would make so much sense for me to just take all of that liquidity if we accept back into those gaps. But yeah, no, I do think we're eventually going to trade those prices. I had the thought that we could do that this year. I have a little bit less confidence maybe than I did 2 weeks ago, but I guess we'll see kind of what we do, right? I guess we'll see. 30K is very, very important level for context, though. You're absolutely right.
Yeah, I consider it sort of basically like 10K was in 2018 and 2019. Once we broke down from 10K, we went down to 6, and once we broke out of 10 in 2019, we went to 14. So I'm just using that mid curve, left curve, whatever you want to call it, low IQ, easy mode basically, right? And that's the way I'm going about it, brother. But and I'm starting to feel a little bit exhausted from the meme coin season, dude. It's taking a toll, man. It's really taking a toll. This market seems to not want to make me have my rest, you know? Like I remember back in like early April when these Arbitrum eco tokens had that last leg, I'm like, okay, I can finally take a break. And then it's like, yo, there's this thing called Pepe, and then everything connected, and it's like that last. It feels like the last hoorah.
And then you get everyone who
That
wants to catch something because they missed on Pepe, right? Like, which is why we got Wojak moving. It's always kind of funny.
yeah.
Yeah, I posted something in the nest too. I guess the lawmakers, a bunch of people are now just begging this guy to pause, man. Are we gonna get this guy out the way since he's tomorrow? Do you have any
I
or are we just predicting basic 25 and maybe we'll
I
see
think
more
he's
we haven't
cooked.
targeted?
I think he's cooked, man. I think the Powell narrative is done. Jerome Powell this, Jerome Powell that. Oh my gosh, Powell said this, Bullard said that. Like, give me a break, man. Show me the Nvidia chart. Show me the Apple chart. You know what I'm saying? It's like, who cares, man? Like the infrastructure bill that you were talking about, premise hasn't even taken into effect. The TGA is going to run out of money next month. The debt ceiling is going to have to be raised. What does that tell you, brother? You know what I'm saying? I think people just need to chill, man. They just need to chill and start doing their own due diligence. You know what I'm saying? As far as like what what asset vehicle they want to drive to help out their families and their loved ones. At least that's how I'm looking at it, man. I'm like, okay, man, like when did people start caring about CPI and FOMC? Like what, like in May of last year? You know what I'm saying? In June? It's always at like the worst times ever. And when old Auntie Janet Yellen starts speaking, usually means we're pretty much frothy as far as like a bear narrative. Like she's the one that takes us higher. Anytime she starts complaining about liquidity, oh, it's time for another leg higher. It's time for another leg higher. 6 months ago, bro, if we're just talking price, man, right? Because Snorlax, you say this too as well. Price dictates narrative. Am I right on that, brother?
Absolutely, Wabi.
Okay.
And I was just about to say, I kind of think I agree with you in that the market does not care about, Powell. It doesn't. It will care about inflation, obviously, and it'll care about Powell if we get any unexpected commentary. But at this point, these entities have gotten so sophisticated in being able to kind of predict not only what can happen at these meetings and during these macro events, but also, a general expectation of of kind of how Powell is going to approach the event. So as we have, I get, I'm going to keep using the word sophisticated as we kind of have this more and more sophisticated players approaching, the market from this angle. You would have to imagine that the volatility we experience on FOMC will probably be, more and more muted, or at least, these reactions that we get kind of as a result will likely be just, using volatility on this event to target local liquidity before we get, maybe a more meaningful move. But I think the market's getting itself, into a position that it's not unfamiliar with, right? Where, the market is going to have to correct itself, through positioning, through supply and demand imbalances. And right now we're in the process of, trying to create one of those imbalances right now. So that's really kind of how I view this market. Eventually, we will correct ourselves. We'll correct the positioning in a way that's necessary for us to go substantially higher or for us to go substantially lower over the course of this year. Maybe we just range the entire year. God forbid, that would literally just be awful. I have a hard time, you know, just gauging on my own behavior here. And, we're talking about meme coins on the space. It's May. I would imagine, maybe that doesn't play out super favorably for immediate term upside, but um, I don't know. I mean, I have to assume that at this point, the Fed can't really impact the market the way that it would like to. It won't, but it would like to. And so I think positioning, not to copy the commentary of some brilliant options traders that I like to source for equity commentary, because I think they're really brilliant, but it is at the end of the day largely derived from what positioning is going to do, which when we're talking about a market kind of correcting itself in a manner where it can move more aggressively, that's what it's going to take.
I do agree. Of course, you always know. I think we've been bidding no matter what the force and pause. But I do think if he pauses, we're gonna rip. The day he does it, I think it's a full send in equities. I think crypto Ben didn't care. And I don't think equities have to correct too hard. I look at the Q's chart minus Nvidia, which Nvidia can actually just literally go all time high if it wants to. So minus Nvidia, the rest haven't participated. That's why I think if he just gets out the way, they full send it. And I think Qs have traded in certain ranges that filled in plenty of imbalances. They don't actually need to trade lower than here. They have all the right to literally start gapping up, except they need that one mother effer out the way. So that's why I'm waiting for him to get out the way. I think if that happens, Qs are going to be like 350, 380 or something before anything bad happens to them. That's just my thoughts, though.
What
What's your
individuals
view?
do you think drive that premise? I'm just like trying to pick your brain here.
Oh, what'd you say? What would
What
drive it would be fear of
Yeah,
missing
what
out by hedge
individuals do
fund.
you think? What individuals do
Oh,
you think really drive that?
Oh, okay, yeah. Biotech, AI, and I think marijuana stocks. That's about to make a play again. All the charts are starting to look really good. These are all Nasdaq things. That's why I found a lot of cheap things in the Nasdaq. Bullish divergence on weekly high time frames, deviating bottoms and closed above those deviations, and I'm like, huh. These are all in the Nasdaq. I was like, the only thing performing so far has been Nvidia and stuff. If these guys get going. So I don't know what the time pivot is. Perhaps it is this Jay Powell guy getting out of my way, but they're waiting. I'm telling you, these things are about to fly. They just need one thing to get out the way. So, you know.
Yeah, I mean, the market has essentially been calling Powell's bluff for the entirety of the year, right? I mean, that's kind of how I've interpreted it, right? Because, basically with the premise that I will always point out when I say that because it always makes me laugh. But, um, yeah, I mean, basically, they've been front running and calling Powell's bluff all year on the premise that you might want to keep rates higher for longer, but we recognize that you definitely can't in the current system without breaking things substantially. So I guess it's going to be kind of a decision for the Fed to determine are you going to maintain this strict stance that you have on fighting inflation? But like you said, premise inflation prints are going down. I have to think this FOMC meeting would be infinitely more interesting or maybe predictable if we had a CPI print, that maybe came a week or two before it. But I don't know. I because if the market is or has been, pricing in the Fed's inability to pause or pivot this whole time, how would the market react when he actually does? I agree with you, premise. I think, you have when you have reactions in markets, obviously you have the immediate one, and then I think you have the more actionable one, which is kind of, the one that plays out over, the following 2 or 3 weeks. So I guess I'm kind of curious, viewing it through this lens, if the market has been, front running this pause for essentially the entire year. What do you feel about, the idea that could be a sell the news type of pump premise?
Well, the data showed that hedge funds are actually more positioned in puts than they have been since 2011. That's why I said if he did it, we're not trying to wreck bears. Bears are already wrecked. We're trying to convince hedge funds to FOMO, to get afraid that they're about to miss out. So that means there's basically still just a plenty of money that hedge funds don't have to the top side. And like I said, they're mainly worried, I think, about will he just raise into a crash. I see him as a time pivot, that it's going to be one of the days we see him that we can finally just say, okay, let's just go, because no one cares until something breaks down the road potentially. But we got to use the word potentially because we see unemployment still coming down. Oh, I posted it in the nest. By the way, people have savings. That was another thing that a lot of people were telling me. Personal savings were going down. Personal savings just ticked up. They just got the March numbers in, ticked up 5.1%, highest since January 2022. So personal savings are actually on the way up. People have money; they're flush, dude. Like,
Exactly.
get him out the way. What else is there to
Exactly.
do? Yeah.
Exactly, dude. Exactly. But man, as long as the data dictates positive news, we'll be good, man. Wheat is already going near its December 2020 lows. So, I mean, again, dude, I left curve the crap out of this. I don't try to analyze data. That really sounds like a bunch of jargon, right? Um, if I see things like crude oil, wheat, lumber, just basically going into a macro bear market, then I'll be good, man. I'm just gonna bid my stuff in the tech market, right? Rather in the digital asset space, since I don't really trade equities. I don't really pay much attention to it, really, outside of just like single names, right? But Coinbase stock is actually looking pretty attractive here. I believe it's at like $50, $49 today. So if I see that thing going sub 40, man, that does look attractive to me, man. It really does. And that was a question that I wanted to throw Gregg's way, because he was mentioning how he had invested in a company that had exposure to Bitcoin. So I wanted to ask him about what he thought about MicroStrategy, but also Coinbase.
I bet Greg probably doesn't like MicroStrategy. I think a lot of the more hardcore Bitcoiners probably don't, and I can't say I blame them. Given that the ethos of Bitcoin is largely built around decentralization. So to have just one person buying up so much and buying up a lot of it with debt too, which is, as Greg was talking about, a point of failure. Wabi, I'm sure you saw kind of, maybe not. I think it came out yesterday that MicroStrategy might have issues paying off its loans on some of the Bitcoin that it owned. Did you see that premise?
Nah, I didn't actually see any of that. I'm always late to that type of stuff.
So it's basically buy the news then. Buy the news. A few days ago, it was the government is selling on you. Last month, it was VC banks going down and USDC depegging. Everything is just buy the news, bro. I'm not gonna trip. I'm not gonna trip at all. Um,
I would imagine Greg would say he wouldn't like MicroStrategy though. So the scenario he was painting, whether he wants to admit it or not, was the ultimate there is no money scenario. He was saying you got to have Bitcoin no matter what price it is, because there's a world where potentially everyone just has no money instantly. Everyone goes broke all at once. I'm pretty sure that's, and so in that world, even in MicroStrategy, this they still have banks and stuff, but the banks don't have their money. MicroStrategy takes that hit on the books, right? So I think he was painting the ultimate scenario of like, no, you need Bitcoin in a cold wallet. I don't want to, go off the wrong way, but that sounds like what he was getting at. Like, no, y'all don't understand. It doesn't matter. It's 28K. It should be worth 2 million, is what I heard him say. I think he's painting the ultimate there is no money scenario. So I imagine he would say stick to Bitcoin by
well,
itself.
Michael Saylor just tweeted something out. I put it up on the nest. It said, Bitcoin days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling. December 18th, 2013. My bad. Sorry. It was almost 10 years ago. Ah, ah, ah. Isn't that funny, man? That
That
is
is
some.
funny.
That is
That
something
is really
else.
funny.
That is some dude. Nobody has ever brought that up to his face, but what I
I respectfully
realized,
deleted it.
and I mean that was near the high of that previous that of that cycle, but no one has ever brought that up, and I don't think it should be brought up because I feel like with some people that look to Bitcoin as like a god, they would take that like so personally, and they would just throw ledgers at you.
Well, people are allowed to change their opinions too, you know.
Yeah.
I mean, Bitcoin's undergone quite a bit of, in addition to, you know, price mobility, obviously narrative mobility as well. It's taken on a lot of different faces. In order to be successful over the last 10 years, I also think that's, you know, one of the most bullish things about Bitcoin and crypto in general is that it's kind of like a chameleon. It can always, you know, rebrand to stay relevant. But I am kind of interested to see if AI maybe steals its thunder, you know, coming into the next decade or so. Wabi, you brought up that poker comment. I know some people for a while kind of compared the bubble in crypto to kind of what we saw early on in terms of, you know, online poker days. I think it's going to be a little bit stickier than that personally. But I do think it's an interesting comparison nonetheless to bring up about crypto specifically. But I have a, you know, obviously I have a completely different view on how Bitcoin will, you know, play out over the next 10 or 15 years. But I do think it's, you know, it's definitely something worth talking about and something interesting because that's not the first time I've heard, you know, that analogy before.
Yeah, look, you're allowed to definitely change your mind. I'm not gonna hold them to that tweet, but I sure put it in my dumb shit on Twitter folder just now. I bookmarked it. So yeah, that's pretty good.
Yeah.
Remember the McAfee days? That
Yeah.
guy. He
That
was he,
that
he
that
wasn't
was
the hero
good.
we deserved. He was just the one we had.
That was a good one, man. I I I uh I know there's a lot of controversy around McAfee and all that stuff, but that was a guy who pretty much foretold the surgence of DeFi. You know what I'm saying? I honestly find it like entertaining when people just freak out saying like, "Oh man, you like DeFi? Burn him to the stake, burn the witch, burn the witch." It's like, chill, man, chill. And it brings me back to the analogy that I've been saying recently. It's like, imagine if you're in the 90s and you wanna buy like, you know, some names in the queues, right? Or you want to buy QQQ, and then you have like a Dow Jones Maxi that says, "How can you speculate on tech? You have to invest in the fundamentals. You have to divest in value." It's like, chill, man. You gotta chill.
I think the trade-off between, you know, safe versus risky assets is pretty well illustrated between or on ETH Bitcoin, man. You know, you get those periods of just massive, massive outperformance. And then you get the periods, of course, where it's almost like borderline depression levels for the super heavily risk stuff. So, you know, it's like anything, man. It's all about timing. You know, most people get timing wrong though, because most people are investors, and on the trading front, you know, most people are unprofitable traders. So, I guess it's not a surprise that most get the timing angle wrong. But yeah, I mean, you don't have to time things perfectly to make money. I guess that's kind of the beauty of being a trader.
Yeah, I brought up somebody who requested called Doc. What's up, Doc?
What's up, Queen Wappy? What's up? How you doing?
I'm doing fantastic. I woke up pretty early, and I thanked God. And then I spoke to somebody called Gregg Foss, and it was like a movie character experience. And now I'm here talking about price. So I really can't complain. I also avoided a tornado, which was about an hour away from me. I did experience some slight rain, but it was nice. It sort of cleansed the area and all that stuff, and I got to see a rainbow. So I'm blessed.
That's dope. So I saw Leslie Mata in the space. That's my girl. I love her from a deep place. I want you to understand. I have one of her shoes in my house. That's true. Um, I want you to also understand this. I am no ordinary human. It's okay. Nobody in this space needs to know what that means. But I do want you to know I am grateful for you bringing me up. I don't know if it was you, King Wabi, whether it was you because Bitcoin.com, whatever, it doesn't matter. But I am grateful to be able to say hello to everyone in this room.
Well, it was me. So thank you so much for coming up and supporting the brand. Welcome to the show. We do spaces throughout the week and multiple times in the day. And they can include a wide variety of things. They could include people that have been in finance for a few decades, people in the crypto industry,
Mm-hmm.
um, people that key opinion leaders and all that stuff. Like we've had Benjamin Cowan on a few times, so it's really a diverse place. But sometimes we also enjoy having community spaces where we just talk shop about all things financial markets.
Well, I have my own thoughts, and I will share them when necessary. I have been here for a while, so I have a lot of things I can share. I want you to know that the reason I'm in this room is because of Leslie Mata, this beautiful human who I met at NFT NYC. Um, Ayo, King Wabi, I know you. I know your name. I feel you. I understand you. But understand this.
Yes.
Doc is here for Leslie Mata. That's it. And anything else that may tickle my fancy. So let's go. What are we talking about today?
I feel you. Let's go. Let's go. I actually invited Leslie to speak. Ma'am, if you want to come up and speak, I sent you an invite. Feel free to come on up. Invite to speak. Yeah, feel free to give your thoughts if you have any questions about the markets. Feel free. Feel free. Well, in the meantime, premise. Oh,
Riveting. Right, right, King Bobby?
riveting.
Riveting. That was
Riveting.
riveting.
Yes, yes. Uh, premise, brother.
What's good, King? Yeah, no, man.
It was a trip. You gotta love it. You gotta love it. You gotta love these spaces.
I'm,
You gotta love these spaces, brother.
yeah,
You never
man.
know. You never
Love
know. You
them,
never know
love
what you're
them.
gonna come across on Twitter Spaces, dude. You know, like you can get so in tune with the conversation, get so in tune with talking about price and all these events in the market, and then you could just run into somebody that sort of like breaks the ice and has you breaking character. You know what I mean? But
Like me, damn it. Show up as you are. Let's be ourselves. Let's go.
exactly. Thank you. Thanks for the energy. I appreciate that. I appreciate the genuineness. But
Yo, same. I appreciate that in you too, King Bobby. I've known you actually for a while. You may not know me, but I know you. And I appreciate your energy.
thank you. I'm sure it's from karaoke spaces or something like that.
Let's go, King Bobby.
Thank you for the enthusiasm. Um, but premise, man. I know you've been mentioning the infrastructure bill and all that stuff, and that's something that we have yet to go in depth on. But what do you think that means for the markets outside of like upside? What exactly does the bill entail for the economy?
Yeah, so to me, it's stimulus, right? That's just the way I look at it. But it's not stimulus as like the chips bill were for chip manufacturing, building them free plants, which is huge. This money's going more into reconstruction roads, etc. So the money is going to be spread around pretty big. But White House projecting 2 million jobs per year they can create with the infrastructure bill. They once asked Powell about it too. They said, "How hard is it to get inflation down with an administration that's spending?" He said, "Yeah, that makes it difficult." He can do what he could do, but the president himself can also inject liquidity in, right? He can tell people they don't have to pay their student bills, their student loans back, right? He can forgive those completely. He can write huge infrastructure bills that will create projects that brings manufacturing. all the way back to America, which, by the way, we don't even have enough workers to fill those jobs. I don't believe. So, they're the type of labor that Americans just don't want. So, it's a weird world. I do ask myself, like, how that's going to look, how they're going to fill the needs there. Immigration obviously seems to be the biggest, I think, way to go. I wouldn't be surprised in this next presidential election if immigration gets brought up. A lot of businesses have help wanted signs for jobs that Americans just don't want to do anymore. Um, you could, it's either automation or immigration. I think immigration is easier to do early on. And so who knows what the trickle down effect of that could be if we're talking about injecting these new jobs, these are good paying jobs, people have to move to those areas, houses got to be built in those areas. That's construction, right? Like the trickle down of it. What's the effect of that whenever that gets really on the road? All the stuff that I can able to read just says in 2023 these things will start kicking off, right? We don't know the actual details, but it's one of the things I do think about when I think long term, when I think the next 2 to 5 years, really, that this is a huge source of, in my opinion, stimulus that's going to be injected into different regions, and how that's going to kind of look. I heard Texas wants to build bullet train system connecting the major cities. That'd be interesting. See, these type of projects we need to be doing in this country. That's amazing, right? Like that'd be dope. I'd visit Texas if you could just hit all the major cities in the same day on some huge loop. That'd be tight. So who knows but I think we do need to start advancing and updating our infrastructure. We got trains that's still falling off. Did we just had Yeah, we had trains derailing. Right now, come on. I'm not going to put the tinfoil hat on it, but the point is, obviously, we need to update that tech. I recently suffered a loss of family because someone wasn't paying attention on the road. We need to get more sensors put in these cars with more auto braking, I believe. He was a truck driver too, so it's like he's got this massive vehicle. We could use a change in that entire industry. Yeah, we want the human still driving, but there should be something there because what happened there was just ridiculous. So I see the need for different things. I see how we can grow. I see the way we can kind of advance the next 10 years, and I'm bullish on the outlook on all that. 100%. That's a lot of injection right there.
Yeah, as far as here in South Florida, I'm noticing a lot of new developments. We have a bright line now, and that goes to across a few key points here in Florida. So you can basically now go from all the way from Miami to Orlando in the summertime, and eventually they want that to go all the way to like Georgia. And there's hardly any stops, right? So when people say like, "Oh, America's not innovating anymore," oh, like where's the infrastructure in America? People need to look around, man. They really need to look around, and you even have something called like freebies, where in your local cities you're able to hitch free rides, and um, I'm not sure exactly how people say like, "Oh, we peaked in 2014 with Uber and Instacart," right? Like, there are upgrades that come along into the economy, and I'm personally excited, and it really seems that like what Drunken Miller had said, which I believe is like indices just trading in a large range, while tech outperforms, sort of like a stock pickers market. It's interesting to see that come to fruition, and also interesting to see people take that into a completely different context, right? Just because there's bad news doesn't necessarily mean that the world's going to end tomorrow. You know, um, and there's a lot of propaganda out in these markets, especially when it comes to social media, right? And as we've seen in the crypto market, right, when you have what's that website, CoinDesk, that's bought out by lobbyists. If that can happen in the crypto market, right, then just imagine how like the Wall Street Journal is manipulated and all that stuff, and CNBC and all these other headlines, right? And yeah, it's really easy to call Powell's bluff now, dude. I think he's been bluffing for like the last 6 months, but I think what he said back in June about a soft landing, that's gonna be true, man. That's gonna be true. And um, again, I think we have a lot to look forward to over the next 18 months. But
Yeah,
Outside,
I don't know if it was maybe it was a forward looking move to do the infrastructure bill. Perhaps they knew they were going to manufacture some crisis. But who knows? Because it will act as a cushion if that thing can kick off at any moment they want. But dude, we haven't even solved traffic yet. You were talking about what things we're doing. I think Elon wanted to do like loops under the city. I don't like that, but they got the flying cars, the VTOLs, helipads for big cities. I think that could be dope. So much weird shit we're about to start doing, man. Let's just dread this shit.
so outside of markets, what do you guys enjoy doing to relieve your stress from all the numbers and digits and all that stuff? I think what conserving your health preserves your longevity in these markets. I think that's a conversation that should always be entertained whenever we're talking about like finances. I think it's always good to kind of dive back into, all right, so after market hours, what's something that helps improve your skill sets? And for me, it's powerlifting and strongman.
Man, I absolutely feel you with that, Wabi, because trading these markets every day, a lot of it is, if you're not keeping up with your mental, you're going to get destroyed, or you're going to be constantly pushing yourself in a way that is just conducive to making mistakes. So absolutely adhere to what you're saying. You got to keep yourself in a good headspace. The way I do that every single day, man. I try to work out every single day. Body can't really allow me to lift weights every single day. Because I'm not on like growth hormone or whatever. So I do take like a day or two off during the week when it's a little bit busier. But I always every single day, man, I walk through my city like 5 or 6, 7,000 steps a day. No devices, or at least I'm not looking at any devices. Like I'll be listening to music maybe, or I'll be talking on the phone with like Premise, Max, Carter. But it's just nice to get away from the chart, get some fresh air, and just walk around, man. It's just kind of my serenity during the day.
Premise, how about yourself, man?
Yeah, I'm a serial thinker. I spend a lot of time thinking and stuff. When I get away from the charts and stuff, when I allow myself to have a break, I already like to travel. That's how I keep myself fresh. Because I do this full time. I've been doing trading full time for some time now. And it was great to join because Bitcoin, because this gave me more stuff to do, get to hang out with you amazing people and talk markets. So I like to I'll do like working out and stuff. And I go shoot pool, man. I do like to go have some fun. It's borderline sociopathic. I love to compete, so I go shoot pool. I talk shit to old men, and it's always fun. They're the same type of people like me. So I do kick back. I learn to kick back, but man, I actually spend a lot of time on creative projects. Believe it or not, trading is it's like it's a source of income and stuff, but I actually am really empowered when I'm just like kind of creating, and that comes back to thinking. I actively plan my life. I have a huge vision for it. I have a huge vision for it, and I sometimes catch myself an hour at a time just pacing as I do now, and thinking.
Cool, man. See, we have Will's Outlook. If Will's Outlook or Max want to come up, feel free to do so, guys. If not, we'll begin to wrap up here. We've been going for close to 3 hours now. We'll give it a moment or so. But yeah, if you guys enjoy this conversation, feel free to follow us here at Because Bitcoin and turn on bell notifications to keep up with our shows. Our next show is at 4:15 p.m. Eastern Time, where the entire team is going to be present. And then at 7 p.m. Eastern Time, we have Crypto World Radio presented by myself. And a few people are going to participate in our panel outside of the Saga team, and that's at 7 p.m. Eastern Time again. And as far as tomorrow, I want to make this announcement here. We're going to be having David Hunter on our YouTube stream, 10 a.m. Eastern Time once again. And I don't know, guys. What do you want to do? Do you guys want to do market check as well with David, or do you guys want to do a Twitter space just so I can let the audience know? What do you guys think?
Um, we can. I mean, I'm sure that's a question for Max. We can just, we'll communicate it through our Twitter. So,
Okay.
uh,
Okay.
like
Okay.
definitively. So
Okay. Yeah. Well, we'll let you know, guys, by the end of the day today whether market check is gonna just proceed after David talks some shop with us. And yeah, thank you guys so much, by the way, for sticking around for 3 hours. So take care, everyone. I'll see you guys in a couple of hours for market talk. Goodbye, and God bless you all.